Hey, welcome back to another episode of T2 SMC Trader. So in this video, I'm going to explain the Friday PM session setup. Over there, when I will explain this setup, I believe that you will get some insight or information, good information that will help you to understand the bias. At the same time, you will be able to recap your fair value gap concept by this small video. So it's gonna be a small video, I believe. So let's go to the video. Over here, you can see this my minus 2.5 standard deviation from monthly chart. That is my extreme target. So after that target is hit, I will start to look for sell only. So my expectation is market is going to fall from that area. But until then, I am actually bullish from my monthly chart. Let's go to 15-minute chart. I don't need to spend more time to the higher time frame. The reason is I would love to explain the price action only for the PM session. So over here, when market came until that area, so just let me remove all of these things so that it is going to be a clean chart. You can't complain that, brother, why did you start from annotated chart? So here it is the clean chart, and I would love to explain this small price action. Okay, so over here, this small price action, I'm going to explain. When market came over there, there was no resistance that could stop the price and send it back. When market fall to that specific leg, you can see it is inside the lunch hour. When it fall, I was seeing this bullish fair value gap around that area. So let me mark that bullish fair value gap from 15-minute chart. As per ICT, when market is at the all-time high, you should keep looking for buy. Around that time, I had an opportunity to look for sell because I had a wick which I could use for my sell setup around the morning session. But it didn't work, and it keep reaching for the all-time high or the new buy sell liquidity new all-time high. That's why I should only look for buy setup only, and every bullish fair value gap I'm gonna use it for my buy setup. How can I look for the sell setup? If market can make a bearish fair value gap from 15-minute chart, it's gonna make the you can go for the sell setup. Other than that, you should only keep looking for buy. Just remember, this was the bullish fair value gap, and around lunch hour, market has traded that bullish fair value gap. At the same time, look at the fair value gap, where market worked with this fair value gap. So here, when I started this video, I told that you will get some insight from, you will get some recap about how to use the fair value gap. Remember, if you are expecting that market is going to high, it should not work with the lower portion of the bullish fair value gap. That means body should stay to the upper portion of this fair value gap. Over here, can you see how beautifully it worked with the upper portion of the 50-minute bullish fair value gap? At the same time, how can you be sure that market is going higher? I explained that already, because when market is at the all-time high, you should keep looking for buy. And if you get some kind of wick like that, maybe you can use those wick 50% for a sell setup. As you don't have anything over here, you should keep looking for buy only. No sell is valid until market make a bearish fair value gap from 15-minute chart. Now, if you take a look over here from 1-minute chart, when market came here to the first time, that bullish fair value gap, to that specific bullish fair value gap, this is that leg, okay? Here, this one, here, that one. It was inside the lunch hour, so I'm not interested to take that buy. The reason is it was inside the lunch hour. Then market come back again, came here. It has taken this low, traded that consonant crossment of that bullish fair value gap perfectly. Look over here, how beautifully it has traded that consonant crossment of that bullish fair value gap from 50-minute chart. At the same time, it has traded this 1-minute last fair value gap. So let me mark the 1-minute last fair value gap over there. Here, it has traded that 1-minute last fair value gap. Let me actually change the color so that it will be easier for you to see. It has traded that 1-minute last fair value perfectly, then it went higher. Now, if you take a closer look of that area, I would love to mark the setup. Okay? So this is the sell side liquidity which has taken over here. After taking this sell side liquidity, this is a swing high which has traded that fair value gap. This is a perfect swing high for shifting market structure. So I would love to mark it as my market structure shift over there. Then I will talk about the time rotoring. After shifting the market structure, here, this is the all-time high over there, okay, around that time. So here I'm talking about there. Around that time, this all the all-time high. At the same time, from 1 minute chart, it was a perfect buy side liquidity. So I would love to mark that buy side liquidity around that area. That was a clean buy side liquidity around there. This market structure shift happened inside the macro, that means 1250 to 110 macro. When it has taken this liquidity, made the swing high, just went little lower to validate that swing high as a valid shifting market structure swing high. Then very nice displacement, perfect displacement. When I got that displacement, I will see there is a fair value gap over there and immediate reaction. Now it is not inside the PM session because the PM session started around 1 p.m. Okay, I told all of you to look for the setup after 1 p.m. not before 1 p.m. But it is also valid if you look for a setup before 1 p.m. inside the macro, that is 1250 to 110 macro. There is nothing wrong with that. Okay, in that type of situation, that was a perfect market structure shift. I would love to take my buy from there, and my stop loss is going to be maybe below that low, or if you are overzealous, you can put your stop loss below that low. Okay, that is specific low. Where should be your target? This one. Now you can say, brother, this is the extreme high. No, it's not the extreme high because this is the liquidity from your 1 minute chart. So it's not the extreme high. It's the liquidity from 1 minute chart. And you can see there is some kind of last fair value gap. If you are not able to catch that move, you should take a partial around that area. Okay, you should take that partial. Now what happened? You can see perfectly market went lower and stopped me out. That means it has went below that low, around that area. If my stop loss is too tight, I mean just very near to that low, though I wouldn't put my stop loss over there. At that time, I would love to put my stop loss over there below that low. But for the sake of this video, I'll just put it over there below that low, and you will see that you got stopped out over here. Sometimes shit happens. There is nothing that is 100% obvious in trading. Okay, so sometimes some perfect setup also didn't work. It failed. This is Friday. Friday is extremely a difficult price action. At the same time, ICT concepts work perfectly in Friday as well. Over here, it actually traded the constant crossment of that 1 minute last fair value gap. So first it has been rejected to the top of this first last fair value gap. Then it traded the constant crossment of that last fair value gap. Now it doesn't work. I mean, it doesn't happen all the time. All the time it doesn't happen. Okay, most of the time when it has traded that 1 minute last fair value gap, I'm bullish. Market doesn't come back again to the constant crossment of that 1 minute last fair value gap. If that fair value gap was from 15-minute chart, yeah, then it is important. But 1 minute chart last fair value gap is not important like that way. So over here, when it has been rejected from the high, don't look over here, look on your 15-minute chart. Okay, it tapped to the high, then went higher, it come back again to the constant crossment around that area. It's okay, it's perfectly okay because it is expected. Higher rejection, constant crossment rejection. But same logic in 1 minute chart, no, it doesn't work like that way every single time. If you get stopped out over here, don't get panic and don't just look for sell again, because from your higher time frame you already know that market should keep going higher. It should not fall. If it would love to fall, it should make a bearish fair value gap. At the same time, there was no bearish fair value gap. So this setup, this run, okay, to that specific run has closed all the imbalanced over there. So there is no imbalance, bearish fair value gap. Market went lower, it was overzealous, shit happened, and then you got another sell side liquidity. Sell side liquidity has taken. Okay, I'm just going to remove both of these fair value gap and removing this one. Okay, after taking this liquidity, what it has done actually, it went higher, made this breaker block. I have this breaker block. I was in live to my live streaming with my members. I showed them the entry over there. By the way, they can confirm that if I am lying. Here is the breaker block. When it validated by that candle, at the very next candle, I will take re-entry over there, and I will cover something over there. The mohawk, I will cover it, and that will be my same target around that area. If I am overzealous, then I can obviously take a partial to that specific leg. I can take a partial over there. You can see that order block entry was perfectly worked over there, and it went too much high, and until that high it went higher over there. That was the only setup to this PM session, the buy setup, perfect buy setup. Then market went lower on time, and if you see over here in 15-minute chart, I would love to mark the mean threshold of that order block now. This is now my order block. Okay, from 15-minute chart, that is my order block. This is the 50% on the mean threshold of that order block. When market came here to that mean threshold perfectly, it came and stopped over there to that mean threshold of that 50-minute bullish order block, then went higher. When it went higher, there was no perfect market structure shift. So there is no 22 YT model. At the same time, I have the same thing, the breaker block. Why there was the breaker block? I'm not interested to explain that one because I have already explained the breaker block things in my breaker block video. So here that was my breaker block entry around that area, low, high, lower, low. So this is the breaker block around that area. These three candles is the consecutive breaker block. So over here, this is the consecutive breaker block. If you would love to mark the first breaker block, then you have to cover the the mohawk. Okay, so here you have to cover the mohawk. Market was overzealous, trade that order block perfectly over there. This order block has been traded. It went higher, trade the fair value gap. If you would love to mark the mean threshold of that order block, you can see it tapped to the mean threshold of that order block. So if you take your re-entry over there, depending on that breaker block, your target should be that relatively equal highs from 1 minute chart. So over here, if you mark that 1 minute buy side liquidity, that should be your target. Okay, you can't target the highest high. If you'd love to target the all-time high again around that area, then you obviously have to take the partial over there. Then you can let the rest go until the all-time high. There's nothing wrong, but that should be your target. In my own opinion, that should be the target. I'm talking too speedily because I really would love to make this video smaller. Okay, so when this candle has closed above this breaker block, you have to be in the market to that specific candle. When it closed above that breaker block, this is valid. You should take your entry. Maybe you put your stop loss somewhere here. I don't know where you will put your stop loss by covering your mohawk. You can see it's a very small trade. I mean, near about 6 handles just. So maybe you will cover the order block mean threshold, or the whole order block you can cover if you want. If you don't want to cover it, just put your stop loss, cover the mohawk. If you get stopped out, then wait to break that the breaker block one more time. So this is the next time when market closed above this breaker block around there. Okay, so you can take re-entry over there, and your stop loss should be the same area where you put your stop loss for the first time, and then that should be your target, and it hit your target perfectly. If you would love to overzealous, then you take the partial over here and hold your trade until that area. You can do that as well. So there was two breaker block entry around this PM session. No 22 YT model, perfect setup for the PM session. I had this perfect setup around the PM session, but it didn't work perfectly. Stop me out. Yeah, I took that entry. I got stopped out, and then I took re-entry to that breaker block. There's nothing wrong for getting stopped out sometimes, because you can think that you are losing proof, you are not going to take the loss, but I'm okay with my loss. Okay, so then there was another breaker block setup, and finally I told to my viewers that to my members that market is going to take that sell side liquidity around the last hour. It is going to take that relatively equal loss, but here it is just impossible to frame the setup because this is out of the time. When market is out of the time, this price action is expected. I knew that market is going to take that sell side liquidity. I told them, okay, directly I told them market is going to take that sell side liquidity. Then finally it is reaching for this fair value gap, and let me mark it, and this relatively equal lows, this low and that low. It is overzealous, it can take that low, finally these lows. But here this relatively equal lows is going to be triggered, that is for sure. I don't know anything else, but market is going to take that relatively equal lows. You can see market tap to this fair value gap, and I believe that market will keep falling until this sell side liquidity, this relatively equal lows. That is my expectation. I don't know what is going to happen around that area. I don't really care. But here, when this fall happened, you just can't frame this sell, because though it was so obvious around that area, because of PO3, market should make a reset. That means market should go a little lower and then close around that area because of PO3. Okay, I explained that to my live. If you are interested, please join my live. Okay, it will help you a lot to understand this price action. This also liquid was obvious, but I was unable to frame this trade. The reason is time. It was outside of the time, and I really am unable to frame that trade. So in my opinion, this breaker block entry is the perfect entry for this PM session. And if you are overzealous, you can go for that breaker block as well, though it worked perfectly with the consecutive breaker block over there. So this consecutive breaker block, you can see the mohawk, very little mohawk below this consecutive breaker block, and then it went higher, took the high one more time, then fall. So that was the insightful video for you guys. If you can catch the information from here, and if you can compare your trading with this video, the way I explained, and if you saw something that was obvious to you, but I guess that now you can compare yourself with this video, which is going to improve your trading. So make sure that you have take a lot of notes from this video. You are not watching this video as a movie, otherwise it's just wasting of your time. Okay, so please give me the thumbs up and don't forget to subscribe to my channel. Comment below if you have still any confusion. Otherwise, until the next video, cheers.